Good evening, all. Ira Epstein with your SPDR ETF wrap-up. And this wrap-up is for Tuesday, and we're at the 15th of March, 2022, 6:45 p.m. Central Time. I have to remember all that. Sometimes my brain goes boom. Interesting day. Big rally day today. I think it was more of a relief rally than anything else. We'd been under tremendous pressure in the stock market, and you had a rally that came out of really nowhere. You're in front of the FOMC meeting tomorrow. It's pretty much a foregone conclusion that we're going to get a quarter-point hike. President Biden is going to make one of his trips so he can be in the news and show America he can meet with foreign leaders. He's going to Europe next week. He's going to blow it. And I'm talking our president. He's going to do a deal from the sounds of it with the Iranians over oil. So let me think about this. They just admitted, the Iran army, the Republican army there, that they took responsibility for sending the missiles to bomb the U.S. consulate in Iraq. We're going to reward them. We're going to do a deal with them. Yay, Iran. Good thing, Joe, right? One-termer. Okay, now let's move on. You can see angry beyond imagination. I can't believe this man. You should all understand what he did with Obama. He's got an affinity for Iran. Don't know what it is, but there's something not right here. As an American, I have the right to say that. Okay. Let's go right to the charts. I'm going to stay with Lockheed Martin for another day or so, but I am going to change it, and that's because I was gone. I put it up, and I didn't give you enough days. I had somebody write me about that. So, okay, I'll give it another day or two. Expect the market to do what it's doing, pulling back into the Bollinger Band, the black dashed lines here. Remember what a Bollinger Band is. It plots out an algorithm that will keep the market band, the market prices trading within those bands 95% of the time. Now, the bands will get out of those top or bottom 5% of the time. Doesn't have to be all top or all bottom, but it will do that. But the bands will adjust to the market will trade within it. So if you think about the logic of that, it's a natural resistance point because the market is saying, well, you're only going to trade over at 5% of the time. It'd be like you playing blackjack with me, and I'm going to keep dealing, okay? And if you're going to tell me that you're going to win 5% of the time and I'm going to win 95% of the time, I sort of like my odds to take all your money. Now, there can be variables. You get lucky, you walk away from the table in that 5% and I never see you again. But if you're going to play hand after hand, same bet after same bet, I'm going to get you. It's that simple. Well, that's what this is saying. If you're a buyer over that, you're going to get hurt because the market's going to pull back into the band. Now, how much? That becomes the big question. That's where other tools come in. Something else happened. I showed you the other day that you had right here a crossover where the 18-day average got over the 100. Market's now doing what? Are we going to get back up and challenge that high? That becomes a big question. When you look at the action, this is called distribution. Sideways action. Distribution. It's where neither the bull nor the bear typically has a lot going for them because you make false moves. The reality is while we have higher lows, we have lower highs. You do agree with that? Nothing really going on there. The market has an upside bias since it's trading under my definition. Whenever you're over the 18-day moving average of closes, that's the line in the sand. When you're over it, you should have an upside bias. You're looking for reasons to go long. When you're under it, you're looking for reasons to go short. A resistance point could be the upper band, 485.70. Support, 430.13, that 18-day average. And momentum is now corrected, past tense. It's no longer overbought. It's corrected what? A down move. Therefore, trend up, bias up, and until the market takes out, right here, this low. Come on. 438.61. The bulls are in control of the market, and the target could be that upper Bollinger Band. Take out 438.61. I contend the bulls will be gone from the market like that. At least I think they should. In Apple, I just said to you yesterday, This is a very important set of numbers, the Bollinger Band and the 200-day average. This is where pros get, number one, out of shorts. Number two, the longer-term traders, the guys that are, remember the Jekyll and Hyde I did yesterday? Do you remember that? Okay. This is where Jekyll goes, back to the 200-day average. I want to own it for the long term. And Hyde is going, no, that's where I want to cover my shorts. I don't want any part of that. Well, that's basically what you have going on in that. And in the battle, let me get back to that. In the battle, you can see what the market's doing. This is an important moving average. So the guys that originally bought here, they're not out any money, but they're not making any money yet either. In XLF, I'm looking for a peak on this rally right into that 18-day average. If I'm wrong and it's not that exact number, I got the 200 and the 100. So I'm looking for resistance above the market. This was a contra-trend rally. Why contra-trend? Whenever you're under the 18-day average, it means your bias is down. If you get an uptrend on the swing line, it's contra. It's against the main grain of the market. And often it culminates hitting in that general area, that average, and then it falters. When we come to Disney, well, I mentioned in my morning subscriber video for my traders, I said, you don't want to be short Disney today. And I said, you know why? Watch crude oil. Crude oil, it was breaking hard. When I got up this morning, it was probably down $4.50, $5. It was down $7 at one point a barrel. And you're off from the 130s under 100. So you've had a 30% plus break in the market. Well, that's going to help jets, obviously, the ETF of planes and airports and so on, and probably going to help some of these destinations for travel. So that's important. I brought up to you the argument yesterday, and I haven't changed my opinion. What's it cost a family of four to go to Disneyland? The airfare? Oh, my God. Tickets every day for a weekend or 4 days, whatever families do. The rooms. You're not talking, honey, let's go for, bring the kids and we're going to spend $1,500 for the weekend. Ha! You understand what I'm getting at? Ha! Okay, so it does better if you start lowering some of those costs. In the industrial sector, I like what I'm seeing. I think you can probe the long side of this market. That's what I think the pros are now saying. I think they want to be out if you get under 97.53, and I think they're looking for this whole area as the next resistance point. In the semiconductor, you went down again to the major support. This is where I think the pros covered all their shorts again. The trend is down. Resistance is back up at the 9,700 level. In the home builders, you're back into the resistance, but you rallied enough today to negate the downtrend. You now have a higher high and a lower low right into the 18-day average. Now, I don't think you're going anywhere in the home builders. And the reason is 4% plus mortgages, inflation on lumber, copper, help, whatever. It's going to be very difficult. Problem for that industry, no question in my mind at least. How many people can afford some of these new homes? I mean, they're quite expensive. In the energy sector, you fell back to neutral zone. What's the neutral zone? The 18-day average of closes. So this is what you were like. You lost your readings. You lost your way, so to speak, right? And I'll give it to you. Day one of embedding. I think that was day one, if I'm correct. Not here. Right. Day 1, 2. I don't know if we embedded, did we? Yeah. What happens if you lose the embedded reading? More times than not, you're going to make a run for the 18-day average unless you take out the highest high of the move. Take the enhanced Bollinger Band course. This is explained in detail there. Gold, you lost the embedded reading. You went right back to the 18-day average today. Lost the embedded reading right through there in GDX. Right back to the 18-day average. Copper, lost the embedded reading. Got back to it here. Now I think you're too cheap. I don't think copper is going to be able to stay at that 39.41 or under level for very long. Why? Because COVID is still over. And with all this still going on, there's going to be demand for goods left and right. Now, the U.S. today, we saw an application by Pfizer for a second booster shot. That's important. Remember, COVID, as good as it's in America come under control, it's not that way in Asia at all. It's a real problem. And if you're looking at the recent water tests in America, there's this, I think, variant BA.2, and it's not a good variant. That doesn't mean our vaccines won't work against it, but it's more contagious than the variant we just got through. Okay? Well, maybe that second, why would Pfizer apply for a second dose unless they know something? TLT, look at how you're coming down into tomorrow's FOMC meeting. I told all traders today in my Spider morning video, you want to be out of all your shorts going into the FOMC meeting tomorrow. It's not that I am not still bearish. Surprises can happen, and that's a big break you just had. What if you get a correction? You could be up back at 137 before you know what's going on. The dollar, still very strong, trying to embed. Let it embed before you decide to do anything with it. And last, in the euro currency, the market's just drifting here. Again, these currencies are going to wait for tomorrow's FOMC meeting, the Fed meeting, and then on Thursday morning, I believe it's morning, something in that area, we're going to see what the Bank of England does as well. So there's plenty of bank action coming at you, and you got to learn how to take advantage of it. And I try to help you every morning. I start recording right after 9 o'clock each morning, 40 some odd Spider, ETF, and stock videos. By the way, are you aware that as a subscriber, you can write me and say, Ira, help me with this chart, I'm having a question. And I'll generally make some time during my day to either tell you what I'm seeing, yes or no, or make a very short 1-minute video or so. I'll open up the chart and say, hey, John or Joe or Mary, whatever it is, this is what I'm seeing. Boom, and here's why. Go on, send you the video. You got it. And yeah, you'll be surprised how many I can knock off in a day. I mean, I love teaching. I love being the owner of a brokerage firm. I like answering people's questions, and I like sharing my knowledge. And that's what I do in these videos each and every day. Think of it this way. You have a question, and you're going, who am I going to get an idea from? What's Ira covering today? You go in here and you go, Or you go, he doesn't know what he's talking about. I'm still going to go on my own way. God help you. I hope you're right. In any case, you go to our website, under the word research, all the info is there. I'm Ira Epstein. You have a very good evening, and I'll see you all tomorrow.